Well, hello, everyone. So tonight we have an extra special training. Oh, I think looks like I'm restarting for some reason, but hopefully you all can still see me. Okay, so we have an extra special training. So we are in Q2 of 2023. How's it treating you so far? Oh my goodness. So I am super excited and super pumped about Q2. It's just such an opportunity to kind of reset and just it gives us a brand new canvas with which we could plan the rest of our year. We can dream, we can reevaluate, we can analyze what we have done for Q1 and just kind of plan a path forward for Q2. So my goal is to make sure that all the members of our community are fully aware of opportunities that are within our reach, because we do not want to be rushing at the end of the year, okay? The end of the year is usually where you have an opportunity to just have pockets of rest. You can kind of, take a deep breath, spend time with your loved ones. And my goal is for you to eventually get to the point where your end of the year is just completely blocked off, where you can do what you want to do with the people you want to do it with. And so with that being said, it means that Q2, we really have to up the ante, and we have to make sure that we are on our A game, guys, because there are a lot of things coming up. There's tax season that's right around the corner. And you know what I love to say, we're not going to be living off of hopium. And we're not going to be second guessing ourselves either. And so because of that, this week we've launched a series of market analysis calls. We've been doing a lot of data analysis, especially for those who are looking to get started with short-term rentals with that strategy, okay? So I am expecting some friends, I'm not going to say who, to join us anytime soon. But in the interim, let me go ahead and take a look and see who is here with us. If you are hearing me, if you're seeing me, please feel free to say a hello in the chat. That is going to indicate to me that you're here, you're alert, you are good to go. I just got off an amazing call with the members of our community, and I kid you not, like just really, really celebrating with them. We had a lot of amazing wins to share. And I'm super excited about what everyone's doing. I'm super excited for everyone who's showed up. We have members of our community who have put in their letter of resignation at their W-2, others who have put in their letter of, they're going to be reducing their time by 50% as well. I mean, it's just such an amazing journey. We have those who have closed on homes, those who are under contract on homes, those who have lapsed, and say, you know what, I'm under contract for this, but guess what? It is not a good fit. It does not fit in with my strategy. And so they're starting from scratch for the third time, right? And so that is a part of the journey. That is a part of the journey. And oftentimes when we are on this journey, we're thinking to ourselves, oh no, not again. Or we're thinking to ourselves, it's like the voices, right? The voices start coming in and the naysayers start coming in, especially when we are looking at how we're going to level up, right? When we're looking at how we're going to move the needle in our life in some way, shape, or form. That's when all the voices want to come in and contribute and provide, reasons and I don't want to call it excuses, but these are defense mechanisms, right? And so I encourage you, if you're hearing those voices, especially when you're trying to do great things, just kind of, take a step back and let those voices know, because a lot of times it's that inner speech, let them know that you so appreciate their concern for you. That's a part of it, right? You thank them for their concern. You appreciate their concern for you, but ultimately, yeah, we're going to move the needle. We're doing great things, and great things come at a price, and you move the needle in your life. And so that's what I encourage you to do, my friends. So I am looking on here. Let me see. Again, please feel free to say hello. And I am here, guys, to work with you and answer your pressing. Let's see. Okay, there it is. Any and all of your pressing questions as it relates to short-term rental data analysis. Okay, so today is a Q&A for data analysis. And I am looking forward to hearing from you. All right, so let me do a little bit of housekeeping. I'm going to check and make sure that I am seen and I am heard. Let's see. All right. Let me know, my friends. Let me know in the chat if you can see me, if you can hear me. Okay, awesome. I see a few of you in here. Feel free to say hello, guys. That's the only way. That's the only way. Feel free to say hello. All right. So yeah, I think I'm gonna actually go ahead and dive right in. What if we do that? I did get a few questions regarding data analysis with AirDNA. So let me go ahead and share my screen. And you know what? I'm going to do like a high level overview of how I use AirDNA. I did receive the link for a property address. Let me grab that as well. Let's see. For today. No, today's not the 12th. It is the 11th. Let's see. Okay, I've got one in Oregon. I'll take a look at this one in Oregon. Yep. Should be good. All right, so let's see this. Come on, Zoom. And I've got my chat on the side, Christian. So if anyone has any questions, definitely feel free to let me know. But I'm gonna go ahead and share my screens. What about that? And if our friends are able to join us, they will join us as soon as they can, okay? All right, so guys, here we go. Hot take, right? And since this particular address that was shared with me, I don't know that I want to put it out here in public. I'm going to, let me go on Zillow, and I'm going to share instead an address of a property that is in the vicinity of this subject property, but not this exact property. I think I feel more comfortable doing that. Yeah, let me do that instead. Let's do that. And again, if you have any pressing questions, go ahead and drop it. I've been told that I'm a beast with AirDNA. So there's that. And not to toot my own horn, but toot toot. I don't know why that cracks me up so much, but it really, really does. Okay, so I found a subject property. Okay, so guys, the first thing that I do whenever I'm looking to break into a new market, especially a market that I may or may not be familiar with, like it's not in my own backyard, it's not in the vicinity of where I live, the first thing that I do is I go into the free AirDNA rentalizer. Okay, and I know this is going to be contrary to my friend John, airdna.co. Okay, it's going to be contrary to my friend John, but it's all good. It's all good. We're all friends here, right? I enter the city. Hang on, I'll make sure this is the right city. Okay, so I enter any city or postal code. I will 97367. 9737. Okay. Siri's trying to talk to me. Okay, so that's acting up. All right, so the goal is for me to get to this rentalizer area right here. Okay, so once I get to rentalizer, and that's Siri, stop. Siri, be quiet. Oh my goodness. All right. I enter the address. So here's the address that I have found. Okay. So a lot of people are tempted to leverage like the annual revenue or the average daily rate. My goal, honestly, is to assess the occupancy rate. That's all I want to know. That's all I want to see, because here's the deal. With the occupancy rate, I can identify whether or not this is a market that is one that we have travelers in. And so if it is under 50%, I'm not loving it. My goal is to invest in markets where there is 50% or more of travel. That has been our gold standard, and we have done very well with it. Had I been an investor who primarily focuses on, like, say, markets that are very rural and adventure based and unique, then that metric would probably go out the window. But this is my comfort zone. This is my story, and I'm sticking to it. Okay. So I don't worry about this number or that number. To me, this is all clickbait, but it's this number right here. And say I don't necessarily meet this criteria, I can then evaluate like the bedroom count to see if I detect any significant changes. You see, the bedroom count, has the potential to change the occupancy rate as well. So play around with it. If you're kind of middle of the road, 49% with your bedroom count, then play around with the bedroom count and see if there's opportunity there based on adjusting that as well. And guys, that is pretty much all I do in terms of leveraging the rentalizer. So I hope that helps with the very first metric that I would look at to evaluating a property here in AirDNA, or a market in AirDNA. And that's really all I do with the rentalizer. Okay. So the next step for me is you see down here are actually top comparable properties according to this. So let me go back to my 4 bedrooms and I'm going to update it. And my rule of thumb actually is, let's see, three guests per bathroom, 2 or 3 guests, no, 3 or 4 guests per bathroom. That is my rule of thumb, 3 or 4 guests per bathroom. So that would give me a count of 9, right? Up to 12, really, depending on the footprint of this property. Okay, so a 9 guest count. So that is my rule of thumb. Then the next thing that I would do is I would go ahead and I would scroll down to other properties within the market that are considered as top properties. So I'm going to update actually based on what I am seeing on Zillow as the actual counts. Let's go ahead and pretend like this is an actual situation. So we have 59%. Occupancy rate, which is well within my my goal. The next thing that I want to evaluate are the top properties that are listed down here underneath this particular property that we saw after. And again, you're wanting to make sure that these are comps, at least from the bedroom and guest count perspective. Okay, so you notice that this one has 8 guests. So remember, it's 3 or 4. So 8 guests is really pushing it, but nevertheless, it is 8 guests. And so reviewing this, I have 2 numbers here. Okay, so these numbers on the left are projected or purported rather to be the actual amount of revenue that Airbnb or Verbo or both has collected, not collected, has documented that was paid out. And the number on the right is the potential revenue. Okay. And typically the number on the right is usually higher because everyone hasn't really optimized. So just giving you a little bit of the lay of the land of the cards that you're seeing in the top comparison properties. The next thing is the days available. I love to evaluate properties that are available year round. So the closer to 365, the better. 300 is great as well. 250 is like the least that I would go, but I like to stick to 300 and higher. The next thing is your occupancy, 57%, and the average daily rate is listed there. I just kind of do a quick review of this card. This card seems legit, meaning this is potentially a property that would be considered a comp just from first glance, but we would have to dive in a little bit to know more. So again, right here, all I'm looking at are a couple of things. I'm looking at the days available, okay? And I'm looking at, if there are any clues whether or not this property can be a comp based on the photos. I would then either select or deselect this property. So the subject property doesn't appear to be on a lake. So already I feel as though this property here, oh, it's oceanfront. Okay. I feel as though this property here wouldn't be considered a comp. Okay. So this next one here, 295 days. So all three of these, as far as the day count, it would work as a comp. However, the fact that this one is on a body of water also, I would not keep that as a comp. Same with this. There's the ocean right there. It's riverfront right there, but then the days count is not that great. This one, I think I could take a peek and see the water. So all of these are oceanfront. Okay, so if all of these top properties are oceanfront, they wouldn't necessarily be comps to mine. If I didn't have any other options, if I had like very limited options, I would just leverage those comps and evaluate like what's the difference in revenue that an oceanfront would generate. And then I would kind of take it from there. Okay. And so that is one thing that I look at. The second thing that I would look at is I would open up the Airbnb native app, and you can just select Airbnb, select Verbo to take a look at the actual listing in a live environment. And what I'm looking for is evidence that, in fact, this number is correct, okay? So here's the deal with AirDNA. There is a lot of information in the platform. And when you see, for instance, like 22,000 of revenue generated over the course of 207 days, but yet 365 days, there's 63K, or 330 days, there's 82K. You want to ask yourself, well, these were really different numbers. And, like which one of these, someone's lying, right? Maybe someone's lying. Maybe they're not. Maybe the operator just isn't optimized. But we want to find out at least one thing for sure. We want to find out, the frequency with which there have been guests staying in the space. Okay. And we can probably do that just by, I'm trying to select. Okay, that's not working. So I go in here and I see there are 63 reviews. And so the fact that there are 63 reviews is indicative that those numbers might actually be correct. So my goal is to assess whether or not I have a review every single month for the last 12 months. And I am seeing a review. Okay, so November, September. So we're missing October, November. We're missing October. We have August, July, June, May, Feb. So March and April are missing as well. So that's already 90 days of reviews missing off of the Airbnb platform. Let's look at Verbo to see if some of those are recaptured. So we were like March and April, right? Of 22. So October of 22 is there. So there, that explains it for October. Okay, so let's have a looky-loo. Yeah, there's a lot in October on Verbo. So I see May. Okay, here's my April. My April's here and my March is here. So, okay. So based on that information, I feel fairly confident that this property did generate 63,000 last year, okay, over the course of 12 months. So this is how much this specific property generated. If I have an identical property that is just like this is the potential that I can generate as well. But the fact that they were 57% occupancy rate, there's a lever that I can pull to increase my revenue. The fact that they're being managed by a property manager as opposed to a single well-trained homeowner, that's another lever as well. So I think those are huge, huge opportunities to move the needle for my property. Okay, so that is what I have in terms of Rentalizer. A lot of you should have, no, actually all of you should have free access to Rentalizer. Already this has given me some great information to start off with, but the gold, guys, is inside of these additional tools. So we have research, and additionally, we have historic future pacing information, okay? So research is what has happened in the past. And this next section here with price is what's happening in the future, okay? So let me take a pause. I wanna see what is going on. I wanna see if we have any questions before I dive in a little bit deeper. Oh, yay. Okay, now I'm seeing everyone. Hey, Cheryl. Cheryl says, I see you. Okay, Sandy says, we can see and hear you. Fantastic. Dr. Glock, it's a pleasure to meet you. Yes, we actually do offer coaching and mentoring, and I just got off of a call with my amazing coaching community, which I'm super, super pumped about it. So definitely tap in, Christian, if you want to grab an application for Dr. Glock so we can get to know you a little bit, that will be great. And I think Dr. Glock is on YouTube. All right, so the next thing I want to share with you all, hang on one second, my screen just disappeared. Let's see. Okay, fantastic. I'm back. Okay, awesome. Yes. Okay, so next question, my friend, is going to be, okay, I've confirmed that the market is the market that I want to invest in, number one. And number two, I've confirmed that the numbers, based on some of the comps that we're looking at for the top properties, they make sense for my investment. Okay, so I'm going to show you exactly where to go next. All right, so let me move this guy out of the way. You guys should see my screen again. All right. Okay, so again, this is the subject property. We have reviewed Rentalizer. I feel like you all should be Rentalizer pros at this point, based on the information that we went over. If the next thing that I do, honestly, guys, I leverage this tool called Top Properties, and this is part of my I call this my millionaire next door strategy. I want to understand what are the top amazing, like crazy Mac Daddy properties in any of the markets that I'm interested in. And once I go to top properties, it will give you the absolute top properties for the entire market. And I want to figure out exactly what is it that I can take and glean from that property, whether it's amenities, whether it's a location preference. So just depending on the investment, if I have, an unlimited amount of financial resources and I want to be like front and center, so be it. But that is not how I started. I started, let me show you, like all the way tier 3 or tier 4 or tier 6, really. And then with 1031 exchange, which is a really powerful strategy that we use to, I call it the bigger and better method. What I do is with the 1031 exchange, I get closer and closer and closer to the water. And I pretty much avoid capital gains taxes right now. I defer that with that tax strategy, but then I'm able to move closer and closer to the water without a big investment out of pocket, so to speak. So it's like a theoretical investment, but not, an actual investment. Okay. So when you hear people putting $200,000 and $300,000 down or $400,000 down, there's a number of ways to get that amount of revenue, to put that down. And a lot of it comes from strategy, especially for those who don't just have all of that sitting around. It's powerful tax deferment strategies and other types of strategies that that can bring you these types of deals and make it very, very feasible for you to invest. Okay. All right. So the next step, pardon me, the next step is for me to do a little bit of deep dive into these top properties. I'm noticing that the 5 bedrooms are crushing. There's definitely a vibe, a view. Oregon is just so beautiful. Oh my gosh. So the Pacific Ocean, you're seeing that. And my goal is, it's like, how do I leverage, one of these properties? How do I get my hands on one of these properties without breaking the bank? And so just to get an initial glance, I can actually go into Zillow and put in the property address for the subject property. And here it is right here. So I'll put that in here. And so although the subject property was not like oceanfront or anything like that, if I were to identify properties that were sold in this market around the water, let's see, recently sold. So we're looking for the ones that are generating that massive amount of revenue. So I'm going to deselect and I'm just going to select houses. So what does it mean by 14 units? These are 1 bedroom. Okay, so this is probably the area right here. So let's see. Yeah, so this looks kind of like those top properties, right? Okay, so a few of these are quite affordable, actually. Look at this. 400,000, but this was back in 2021. Oh, and it does look like it needs quite a bit of work. So usually, especially in the Gulf Coast, when I'm looking at, the top performing properties, like the properties that are closer to the ocean are like 4.1 million minimum. And so what I would do at that point is like, this is so affordable. Oh my gosh. Oh, but it was sold back in 2020. It's unbelievable. So what I would do is actually add my ceiling price. So say my price, my goal is typically like 700,000 for this particular decade or 750,000 for this decade. And so when I'm again looking in the Florida Panhandle area, not like the Rosemary Beaches, I'll show you. It's like, you see, like these numbers are just like, does this take your breath away or what? All right. So this is like all the way in the bag and it's like 1.57 and this is, 3.5, right? So that, right. This is like, okay, we're not, when the realtor sends me these deals, I'm like, yeah, they literally sent me a $20 million deal. I'm like, yeah, that's at the top of my budget. Like my voice gets all squeaky, as a little girl from Haiti. It's so like, what are these numbers exactly? I don't know. I'm not going to speak any self-limiting beliefs on myself. Oh, the Zestimate says it's worth 20,881,000. Oh my gosh. I wish you guys were in here just to giggle with me. I'm just here hollering. Okay. So what do I do in these scenarios when I clearly want to be around these properties, right? because I'm bougie. I want to be around these properties, but my budget is 700K. So I put my upper limit to 700,000. This is exactly how we found the property that we are building on the beach. And so what I did was I put that as my upper limit, and then I go fishing. I go kind of hunting and pecking and fishing, and yeah, voila, right? So definitely something that you can do as well. If you in fact are looking in a market where you feel as though, okay, say these prices are too high and I just want to see, properties that are under 300, right? Start with where you are, whatever your budget is, start with where you are and see what's possible in the area. So this sold a couple of years ago for 285, and it's like completely, like a gut situation. There are no walls. So let's see what else. When I see like this amount, I'm like, okay, that's a plot of land or something, right? What is this? Guys, what am I looking at? Can I get it like a description or something? Okay, business opportunity. Oh, really? Okay. Okay. Focus, Rachel, focus. All right. Okay, here's this little blue house in that area. So wherever you are, guys, start with where you're at. If you want to be in a location, start looking, around, see what's recently sold, and get an idea of the current estimate. And then you can then identify what your, the feasibility of your budget for that specific location. Okay. All right. So let me go back because I digress. And on our call a little bit earlier today, we, when AirDNA was able to join, they actually shared some reports with us. And if they're able to join tonight, no spoiler alert. Okay, Sandy says candy store. Yeah, Sandy, like what's happening, right? But anyway, so yeah, so once once you get an idea of what's possible in that market, then let's do a little bit more of a deep dive, my friends. Let's do a little bit more of a deep dive. Okay, so this first tab on AirDNA is your overview. This is your overview tab. Okay, and it's going to be really important. It's going to behoove you to really go in here to find as close as possible to where your subject property that you're looking to purchase, where exactly is it located, in here. Okay, so all of these little bubbles, they mean nothing to me. One of the first things that I do is I deselect a few things here on the right-hand side. Okay, so see if you're following my mouse. I deselect the buy the bed rentals. I deselect the buy the room rentals. Additionally, I deselect the bedroom counts that do not correspond with, my subject property. Okay. And so that thins it out a bit, right? You see, so look, I only had 3 beds and this is all I had, so let's add 4 beds to add a few more. Okay. So I can really get in here. And if you want a few more as well, you can do 5. So, and let's do 2 as well. Okay. So I think I actually moved over a little bit. So this is Lincoln City, Oregon. Okay. Something moved. Okay. There. So let's deselect 5, 4. Okay. Let's keep it at 3. All right. So for whatever reason, I'm zooming a little bit too much, but yeah. So once you know kind of the street number, the street name based on your Zillow of the property. So let's see, like if Neptune Ave or whatever, you can go in here and, just kind of identify where Neptune Ave is. And the goal, say Neptune Ave is over here. So you want to go to the home that's the closest to the subject property. And interestingly enough, this looks like the one that we saw a little bit earlier. That was one of the top properties, I think. Okay, so that's what we're going to do with the map. But prior to going all in on the map, I want to just give you a high-level overview of AirDNA Market Minder under the Research tab. So research, guys, consider this information that happened like in the past, okay? And AirDNA has a lot of information starting at the year 2018. So keep that in mind. So all of this in the Research tab is stuff that happened in the past. Okay, in the Price tab, this is more of, I would say, especially the pacing is future. Okay, so let's look at overview. Overview is just that it gives us an overview. So the market is considered a B market, and meaning that it is compared to 2,000 of the best properties in all of the world. Okay, so as it relates to, I have so many widgets that are popping up, as it relates to 2,000 of the top properties in all of the world globally on Airbnb, it is considered a B, which is great. Yeah, overall, it's great. It doesn't mean all that much. The rental demand, there seems to be a high demand here. The revenue growth, the amount of revenue from year over year has gone down a little bit. Seasonality is at 38. Regulations is at 75. So there are some regulations. So be mindful and pay attention to that. And investability is listed as 66. Okay. What's great about AirDNA is there's like this hover to discover situation, meaning you could just hover in here and then it will clearly define what all of these terms are. So you can dig in here. I just kind of take a glance at this. I take this with a grain of salt. If it's an A, that would shock me. That would kind of excite me. If it's a B, it's fine. If it's a C plus, it's fine. But if it's worse than a C plus, then I'm like, whoa, what's going on here? But again, we don't invest necessarily in entire markets. We invest in properties. So we definitely have an opportunity to turn the tides, right? On this type of investment, even if it's not doing, if it's not the top market, but as long as we're able to understand the market behaviors and what the drivers are for generating a lucrative amount of revenue, you're good to go. You're golden, okay? All right, so the next area I just take a peek at is the average daily rate, meaning, this is middle of the road. So half of the population is making more than this, half of the population is making less than this. So 238 is middle of the road. And it doesn't mean much to me because it takes into consideration like the most lucrative beachfront, $1.2 million home down to the $40,000, not the candy store. No, not necessarily the candy store, but it takes into consideration a wide range for sure. Okay. So bear that in mind. This number means nothing to me. Similarly, the revenue means nothing to me. Also, again, occupancy rate is what I love to look at. And I do look at this graph to see, okay, I know January is going to be low. Excuse me, and August is the peak, so I like to kind of take a peek there. The next thing I look at are the rental types. So this is a market where primarily they're renting entire homes, which is right up my alley. It's what I love to do. We don't really rent private rooms and we don't do shared rooms either. The rental size indicates, what is the number of bedrooms comparatively to when you're comparing it to one another. So the vast majority are 1 bedrooms in this market. 23% is 2 bedrooms, 24% is 3 bedrooms, 15% is 4 bedrooms, and then we have 5 bedrooms, just a few 5 bedrooms. Okay. One thing that I didn't mention is the number of active rentals. Okay. So this is interesting because greater than 1,000 is considered a large market. Let me say that again. Greater than 1,000 active rentals is considered a large market. So we're close. We have 982. Greater than 1,000 is considered a large market. A small market is considered less than 100. And everything in between is considered a median market. Okay. So I don't love a small market just because we found it difficult to rally our dream team in the smaller markets. So you can find deals in smaller markets, but it's not going to be easy to rally your dream team there, find backup cleaners and all of that. So take that into consideration. Okay. Rental growth. Okay. So based on this quarter, it looks like the growth has the growth has decreased. So there's a 3% reduction in this quarter. So we're in Q2. Okay, so I'll say Q1 because we don't have all of Q2. So Q1 is at 1,059. And let's see, Q1 of 2022 is at 966. So I wonder why it's a negative number. That's a good question to ask, right? Okay. All right. So let's look. So it looks like Vacasa has a presence there, but they're competing with Meredith. Okay. So whenever I see a market with like all of these property managers, it's an indicator to me that, wow, this is definitely a vacation rental market. This is a market where we have a lot of operators here. It's a tried and true market. And that's some good information. But the great news, though, is that when you see all of these property managers, there's typically an opportunity for you to go in and really, really crush that market. Okay. Hang on a quick second, my friend. Okay, I had to take a sip. All right. So it is such an opportunity, my friends, to crush that market when you have a whole lot of property managers. And I hope there are no property managers like listening in. They're like, Rachel, I'm coming for you. It's just what my goal is really how do I own and operate the fewest number of properties that generates the highest profitability, right? So if I am leveraging my skill set to go all in on my one property, like it's going to be a little bit easier for me to be wildly successful than someone who's leveraging, 196 or 116. And I know they have teams, but I've seen, I have seen the difference. Okay. As you can see, these scores are not the most ideal. And I'm not trying to throw anyone under the bus. I'm just saying, right? All right. So one thing that I didn't mention are your rental channels. So the rental channels can be really important to take a peek here to see, is this more of an Airbnb, centric market, or is it more of a Verbo centric market? That's going to inform your launch strategy. So keep that in mind as well. Looking at amenities, aircon is not a big amenity in this market. So setting your expectations, right? It looks like we have some hot tubs. Heater is a thing, but no air conditioner. Okay. So it's good to know. And it's on the Pacific Ocean. I can imagine it's like really cool, right? When we went to the Pacific, it was super, super cold. All right. The next thing is you're looking at the rental activity. So this determines the segment of properties and the number of days that were available for rent. So here you had more than 50% of properties were available for rent for the vast majority of the year. So for example, 57% of the properties were available greater than 271 days. Let's see, this is the next greatest. We had 17% available for 181 to 270. Let's see, 13% were available 91 to 180, and 13% were available from 1 to 90. So that's your availability. So 57% were available for the vast majority of the year, and 37% had those same amount of days booked. So, oh no, hang on. Let's see. No, 12% had 271 to 365 days booked. So that's really interesting because it's indicative of the fact that there were properties that were booked close to fully booked. 12% of properties were close to fully booked for that year. So this poses a lot of questions. I have a lot of questions, one of which is, well, is that true? Were they midterm rentals? Were they blocked off? Right? So that got me really, really curious. Okay. All right. And lastly, your cancellation and minimum stay rental settings. Most people are using the strict cancellation policy, and most minimum stays are 1 night followed by 2-night minimums. Very interesting. Very interesting. Okay. So that essentially is the overview tab already. There's a lot of information that I'm provided. I didn't go over these cards here. There's even more information in here as it relates to these cards. So this is similar to what we're seeing on the top properties, but there's a few additional bits of information, namely the review. Hang on, let's see. Okay, we have the days, average daily rate, occupancy, and revenue. No, it seems to be just about the same. That is just about the same. Okay. All right. So that is research. In other words, that is past information. I'm going to pause right now because I feel as though we have covered a lot, and I want to make sure if there are any questions in the chat that you are letting me know. And let's see, and Christian, if there's any update on our guest, let us know. Okay. All right, so I will proceed. Let's see, I'm pulling up questions. 1 second. All right. Mike, oh my goodness, Mike, a long time no see. How are you? Oh my goodness. How about those who successfully have kept bed bugs out of 7 short-term rental properties this past week? Mike, I'm going to need you to tell me more. Oh my gosh. Mike has like an amazing bed bug prevention product, which I'm super pumped about. Okay. Tasneem, welcome. So Tasneem says, when evaluating a market for insurance midterm rentals, do we run the numbers for short-term rentals as well? If you're doing it for the hybrid model, for sure, you want to run it for both. Okay. So to answer your question, the answer is yes. All right. Nina says, excuse me. Nina says, can we please look at data analysis for Myrtle Beach, South Carolina? We can. But Nina, what's interesting about South Carolina, is it the one that has like all of the areas like Merle's Inlet? If there's like a pocket that you want to look at, definitely drop it in and let me know. But if there isn't, that is okay as well. We can just look at the market as a whole. Okay, so those are all of the questions that I have so far. Let me go back to sharing my screens. Okay. All right. So again, we have reviewed this specific section here for research. And Nina, if there's an address in the proximity of the area that you're looking for, I think that would be great. Because Myrtle Beach, again, there's so many areas, right? All right. So the next section is occupancy. Oh my gosh. So this is so important. Okay. And here's why. The booking lead time is one of my favorite things to evaluate and review. Okay. The booking lead time indicates to me whether or not I want to kind of execute my nerves of steel when it comes to book looking at my bookings and identifying whether or not I need to push a little bit further, or if I'm going to just kind of stay the course. Okay. So rushing to reduce your pricing because you don't have bookings like a week or 2 weeks from now is not a good strategy if your booking lead time is like almost 40 days out. You know what I mean? So keep that in mind. Occupancy rate is also something that I take a peek at, but it's something that I was well aware of prior to this. And your length of stay, the average length of stay in the market is 3 days. And this is, again, a retrospective information. Okay. The next thing I like to do, honestly, is I don't really pay attention to this table per se, but I like to download. You see, I just downloaded the occupancy rate. Okay. And when, oh, no. Yes, I do that. But you know what? More importantly, I actually want to download the active listing. I download the active listing. Okay. So once I download the active listings, I can then compare it to my revenue. And what that tells me is whether or not this market is high enough demand for what I'm looking for, or whether or not there's saturation. You hear saturation all day long. This market is saturated. That market is saturated, but really, you need to do the research to find that information. Okay. All right. So without further ado, I do take a glance at this booking demand as well. I don't spend too much time here. The next place that I look is in here. Okay, so we have a variety of different parameters here on this card. So entire place is renting out for an average of $259. Properties that are managed professionally are renting out for $261. So those are the property managers. And the luxury properties are renting out for an average of $415 per day. And so that is your average daily rate. Okay. And the average daily rate are all here. And then they're also priced out here by the tiers. So you have upscale, you have budget, economy, mid-scale, upscale, and luxury. Okay. And again, I love to operate in the luxury space. I get not only my ROI, but also my ROE. Okay. All right. So next area is revenue. And so this is where I do a little bit more data collection as well. Okay. So on the revenue tab, I'm looking, I just kind of glance across the top as well. Let's see. Oh, you know what? Something that I did not do here on occupancy. Okay. I didn't have to indicate the percentile. So I like to, our properties operate primarily in the 75th to 90th percentile. Not to toot my own horn, but toot, right? I don't know why I like that joke so much. Okay, so this is the average revenue by percentile. This is the average revenue by the bedroom count. So it breaks it down. For me, when I'm looking at evaluating a particular market for saturation, I look at my total market revenue. Okay, and the way I do that is I go ahead and download that sheet as well. Okay, so once I select this right here and I download it, you can actually download it based on bedroom count. I just left it at all, but you can break it down even further. I don't detect a large amount of saturation in this particular market, but I just want to go through this exercise because I think it's important to demystify the noise when it comes to saturation. So you hear a lot of, oh, there's a ton of saturation, but is there really, right? And it can't be a feeling, right? Saturation isn't a feeling. I need to write that down. Let me write that down for me. Write that down. Saturation is an actual economic, scientific term. Saturation is not a feeling. And I hear a lot of people gauge saturation based on a feeling. And so without further ado, so here's what I do with this number. This is actually a dashboard that I had created recently. And so this is going to be live on Friday. And what I love to evaluate, and Nina, I'm still waiting on, let's see, on an address if you have one, but if you don't, I'm going to just use what we have, which is, it's all good. All right, so what I love to evaluate is I compare the amount of listings versus the amount of revenue, right? So if I have an increase in my number of listings, I'm going to do 2021 and 2022. So in 2021, these were all of my active listings here. And I'm going to copy this section right here. Copy. Okay, so that's 2021. Oh, you know what? I could have done the whole thing, I think. Yeah. In 2022, I could have gone all the way down to 2022. So I copied and pasted it directly into the active rentals section. And the next thing I'm going to do is I'm going to go to the market revenue. So these are the amount of dollars that this market made year over year. Okay. So right now, again, for those who are just joining us, we're looking at saturation. It's always important to identify for yourself whether or not there's saturation without the noise, right? Again, like I said, saturation is not a feeling, it's an actual parameter. So I'm going to copy that and I'm going to just paste it in here. Values. Okay. So once I paste it in here, all of these numbers get updated. Okay. And then it pushes that information towards this table right here. Okay. And so here's what the word is. What's the word? So in Q1 of 2022, this market generated $9.6 million. In Q1 in 2021, though, it generated $10.6 million in this market. How many active listings were there? There were 851. So more listings and less dollars. You guys see that? More listings and less dollars. Okay. So I always like to double validate my numbers. So I'm going to go back here and I'm going to look at my dollars for Q1. I just did that. And it had, for 2021, I had 10.6. You can see it down there. 10.6 in 2021. And in 2022, 9.6, yeah. More listing, less dollars. Okay, so that is an indication that there is some saturation. Okay, so it's a negative 17%, meaning that there was a reduction, a saturation percentage of 17%, which is not great. It's not the end of the world. If it's a market that I believe in and that I fully understand the market, 25% even wouldn't intimidate me. 50%, 30, 50%, those numbers would intimidate me for sure. Okay. All right. So, and look, more of the same here. Okay. And so this is the dashboard, which indicates more of the same. So have a looky-loo. The revenue is these active rentals. The revenue is this pink line up here. The number of active rentals are here. And let's see, so for Q1 and Q2, so it's following a trend, but it doesn't seem as though the revenue is growing as quickly as the number of active rentals. You know what I mean? So keep that in mind. And let's see, saturation percentage. Let me see here. Okay, it doesn't look like these numbers were updated, so I'll have to make sure that they are. So the numbers on here are accurate, but my dashboard, I told you guys that it's not ready for real time. Should be ready on Friday. So we'll definitely keep working on that. But this is what, I'm working on behind the scenes for your benefit. Okay. All right. So that is how we detect, my friends, whether or not a market is saturated or whether or not a market has, has an opportunity for you to come in and really crush. Because here's the deal. I know that we're afraid of saturation, but saturation is almost like a double-edged sword. And what I mean by that is it's almost like, yes, we're nervous that there's a lot of people coming into a market and we're not exactly sure if there's going to be enough room for us to do what it is that we're trying to do, or to accomplish what it is that we're wanting to accomplish with that market. But at the same time, what it's indicative of is a market that has a lot of demand, that people are actually coming here. And that's not a bad thing, right? That people are actually coming to a particular market, that's actually a good thing. And so, because of that, you want to kind of evaluate it, and see if there's room for you to provide, a value proposition for that particular market. Okay. So that's why I'm not very much afraid of saturation. 10% doesn't really bother me. It's when it gets a little bit overboard, that's when I get more and more concerned. Okay. All right. So the next thing I want to look at is, okay, I'm getting questions. Okay. Hi, Sneha. It's good to meet you. Okay, Sneha's asking about Hamptons, New York, East Hamptons, New York. Okay, so not having a clear, hang on, let me get back. So let me know, Sneha, what are you looking for in terms of, saturation or opportunity for that particular market? So I'm going to look here, East Hampton, New York. It's typically easier if I have like an address to start with. Why is it doing this? Let's see. Because the way it works, analysis is like, it could be a number of things that you're looking at. All right. So let's see, if we were to select, I'm going to select all, maybe. Oh, let me remove my upper limit. So I had the upper limit in here. I'll just put any price. All right. So we have some homes that are in the upper 6 and 7 figures. So if I had an address, I would have an idea of, what it is that we're looking to evaluate. I'll just grab this one, for instance. Okay. So East Hampton, New York, this one here, just a random property, my friends. And yeah, you would just put it into the rentalizer tool. And according to AirDNA, this property has a potential occupancy of 48%. It's a 2-bedroom. This is where I would leverage and see what the 3 bedrooms would look like in terms of occupancy. You see, it's under 50%. I'm not loving it. It's going to be a struggle, to stay booked 42%. I'm not loving it. Let's look at the 1 bedroom. Okay, 54%. Okay, I'm loving it. So as long as it's above 50%, I am a happy camper. So yeah, so the 2 bedroom was not, but the 1 bedroom is. So that is definitely an opportunity there. The next thing I'm going to look at is I'm just going to go down to see who are the top 2 bedrooms in that market, and really evaluate whether or not I have a property that is comparable. So swimming pools are a thing. You can already see that swimming pools are a thing here. Okay. And as far as the revenue potential, these properties that are listed, this one's listed for 364, 316, 292, 344, 334, 334. So these properties that are listed for over, I would say 270 days, 250 days is the bare minimum, but 270 days or higher would be the ones that I would look at in terms of identifying if this number is real. So did this house really generate $70,000? $70,700? Well, let's see. When I open this up, I see that there are 32 reviews, and there appears to be a review, at least one review per month for 2023. I'm missing December, October. I have October, September, October, August, July, June. Okay, so it probably launched in June. So I'm missing a few months, but based on this information, I feel as though this is probably accurate in terms of the amount of revenue that it did generate was close to 71,000, but according to AirDNA, it can make close to 73,000. So this revenue potential is there. I take it with a grain of salt, but I feel confident that this property did generate this amount of revenue. Okay. And so I would do the same for this specific property. I would evaluate how often I'm getting reviews. And I did notice that the price on the nightly rate on this property was doubled. So I was concerned that this was like false information here. But once I opened it up, it's obvious, right? If this is like right outside the home, like if it's that close to the water, it's going to be obvious why this property can demand so much more. Okay. So again, knowing your specific property is going to be a good barometer for me to identify exactly, down to the penny what your property can make. But the top properties, I love living in the top properties. This is, again, my millionaire next door strategy. I do everything in my power to select homes that are as similar to this as possible within my budget. And, you can't move your home closer to the water if it's not close to the water. But as much as lies within me, I can, update my manicuring and have all of these hydrangeas. I can purchase property with a pool. I can make sure that I have an outdoor space with a backyard that is, a vibe. You notice what's similar to, in all of these photos. Well, the outdoor space is a whole vibe, right? And so this property here boasts over, 800K apparently. Yeah. So really, really insightful when I launched really this millionaire next door strategy. And so that's definitely something that I love to do. And it's helped me considerably in terms of finding properties that are next to 7 and 8 figure properties, for my budget, which is under 700,000. And yet, we don't hit 800,000 or 600, but we hit greater than 250K on ours. So yeah, I hope that helps some. All right. So I think we're at the top of our time, guys. I did want to just do a quick review, especially on something that I was speaking with our students about a little bit earlier. So we went over essentially the research side. Again, research is historical. Pricing is going to be your future pacing, right? So this section is your future pacing. And so what I love about this portion of the app is you can really identify, what the behavior is for that market, how many properties are booked currently, and in the future, right? We want to project into the future. So for example, if I look in here, it shows me that this upcoming Thursday on the 20th, only 3% of properties are booked. And that is 44 listings out of 1,300 listings are booked. The median price for the properties that are in fact booked is $510, meaning it's right there split in between. Half of the properties are below that, half of the properties are above that. So at 510, they're booked, but the properties that aren't booked are at a median price of 850. And if you wanted to drill down a little bit and say we want to look just at 3 bedrooms only, that's going to allow you to be a little bit more laser focused on your particular property and other properties that are similar to yours in the bedroom count arena as well. So this is a very great tool to give you like a 30,000 foot view, but we use other tools to get really granular to see exactly who is booked. And at that point, you can identify, well, this property has a similar footprint as mine, or this property has a whole lot more amenities than mine. So do I need to adjust my pricing, or do I need to just implement my nerves of steel? Okay. And of course, it depends on the booking window. So say you're in a market where the booking window for this is 11 days. So the booking window or the booking lead time is 11 days. So what that means is anything within the 11-day period. So today's the 11th. So 22 days and prior, this is your opportunity here to adjust whatever it is that you need to adjust. But beyond 22 days, I wouldn't really worry beyond 22 days, because not 22 days, but the 22nd rather. Today's the 11th and then the 22nd. So beyond the 22nd, I wouldn't really focus on that today. For today, if I didn't have any bookings, I would really focus on, my 11 days, 11 days away. And that is based on the booking window. Okay. So that's what I love to use there. As far as smart pricing, I just I go in and I leverage this to identify some of my lower or average demand season and the average demand pricing to look at the patterns, and then the higher, demand pricing to kind of look at the patterns. That's pretty much what I do here, to be honest with you. And then seasonality, I do look in here. So the properties with the lower seasonality, are indicated in the blue areas. But then here's your high season. So it's almost like crystal clear, right? Your high season. So right now in April, you are in your low season, which is what we saw in the calendar. Not a lot of bookings. Okay. So things start to pick up again. Let's see, March, April, May. Okay. So things start to pick up. I'm going to say mid-May. And then June, right? June is where it picks up. You see June, July, August. Okay. And then down here, you have your monthly revenue per available. This is available room, but which is a hotel lingo, but we don't really do per available room. We do per available rental. So that's a little bit different. But here's the RevPAR are listed here. And lastly, the booking lead time for each month is here. So for March, the average booking lead time is 7 days. For April, the average booking lead time is 23 days. You see that? So this is very specific. So interesting. May is 37. July is 62. So the average booking lead time in July is 62 days, meaning July should be a busy time, you see? So for those who are looking to book in July, they start booking in May on average. And let's see, for November, it's 10 days. So this really is, you see, November is not as hot. Okay, so the heat maps are there. And so that's kind of a high level of how I look at this. I do go in a whole lot deeper than this, but I just wanted to share this with you because it's so important to me that the members inside of our community and everyone that we interact with has access to this data. I don't want our community living off of opium, and I've said that time and time again. The data is out there. The way we can make informed and confident decisions is by having the right information at our fingertips. If we don't know our numbers, at this point of the game, like, what are you doing if you don't know your numbers, right? And so I just want to encourage you, if you're, looking to invest in short-term rentals, if you're looking to invest right now, you want to make sure that you have access to this resource. AirDNA is by no stretch of the imagination pure perfection, but it's still my favorite tool to use when I am evaluating properties. Okay. And so you notice that some of the properties that I mentioned a little bit earlier were not necessarily comps. I don't consider them comps because they didn't meet some of my, some of my criteria. So I would just remove the ones that don't meet your criteria, but the ones that do, go all in and identify whether or not, this market works for you. And if this market doesn't work for you, then you go on to the next and then the next and then the next, because here's the deal. When it comes to evaluating, property, we have members who have pivoted and shift from market to market to market. When I was first starting with AirDNA, I was leveraging just the one market or the one city or the one zip code, and I would pay for that for a couple of months as long as I'm about to open my wallet and invest in a property. I would pay for this investing tool. And I think at the time, depending on the number of properties in the market, it would range anywhere from $30 for that one market to $100 for that one market. And that is contingent upon the fact that some markets, in fact, have over 1,000 listings. Kissimmee has 33,000 listings, right? And so to provide and produce that amount of information, AirDNA would charge more for that. So I would purchase that for, $99, and I would pay, for that for several months as we navigated our investment strategy. But what I wanted to share with the community is I've been able to broker a deal with AirDNA to get us nationwide access. This is all of the US. And as you guys can see, as I was doing this demo, this is a game changer, right? To be able to hop from market to market to market. I've probably looked at 12 markets just today. Okay. So the nationwide access is absolutely amazing. I absolutely love it. And I was able to broker a deal to get that to close to the monthly rate for just the one city or the one market. And so it's about $158 a month. If you go out and try to purchase it on your own, you're at about $900 a month. So it's $158 a month, which is absolutely awesome. It is, just a stellar buy. And so for those who sign up, they will get I would call it a 4-module training on how to use AirDNA, step by step, by baby step, from both me as well as one of the experts in our community. And so this is a workshop that we have pre-recorded for anyone who is looking to purchase the AirDNA with us and leverage that license. You'll have an opportunity to not only get access to all of the United States markets, but you also have access to an amazing training where, everything that I just shared a little bit earlier, that and then more. So I go granular step by step, and I go over the beach property that we purchased in Rosemary Beach, and I kind of tell the story behind that as well. So If you guys are wanting to learn a little bit more about it, the link is shorttermgems.com/AirDNA. Christian, if you want to drop that, that'd be great. shorttermgems.com/AirDNA. Feel free to jump in. Once you get to that link, although I just quoted you the monthly rate, that's about $158 to $183 per month. But we wouldn't be collecting that on a monthly basis. So you can either sign up for us to collect it for the year. You would pay about $1,800, $1,900 for the year. And it's a 2-year contract, or you can pay it quarterly for 2 years as well. Okay, so I hope that you guys are able to grab this. This is a steal of a deal. Again, try to buy it on your own. Month to month, it is like $900 a month. So this is a steal of a deal to get 2 years access for $1,900 a year, to get a year access for $1,900, but primarily it's a nationwide access. You get access to all of the United States. I think that is really the secret sauce. And what I love again about my community is I'm always looking for ways to continue to up-level the members of our community. Yeah, I have so much in store. I have so much in store for the community. You have no idea. Oh my gosh. Okay, I see Ngozi, I'm just seeing your questions now. I will tell you what, save these questions for me. I'm actually going to go live tomorrow. It's Taco Tuesday night, guys, so I'm going to have to run, but I will be sharing tomorrow evening. Let me see what time, at 7 to 8:30 p.m. See if you can meet me at that time. I'll be back 7 to 8:30 p.m. Let's see, there is a link to join me. It's going to be a webinar. I would be happy to go over the remaining questions if you can join me. Okay. All right. Either way, I so appreciate you guys just continuing to network with me and follow and just spend time with me on a weekly basis. I love you all to the moon and back, and I look forward to seeing you guys next week and tomorrow, actually, and the next week. All right.